Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's Thursday. We got GDP today. Yesterday, though, man. I mean, I personally didn't do too well yesterday, but the interesting thing about yesterday was the huge turnaround that we had in the S&P 500 late in the day. Oh my gosh, come look at this. Well, so first with the treasuries, okay, like we're down, we retraced it, and now here this morning we are down below 115 even. Okay, but you know, there was this big reversal here 2 days ago. We're still kind of at those levels, so not sure if it's a huge deal. Should note there's like some single prints in here down to 26.5, so we're still kind of within an area that they have a tendency to be able to move through freely. Not that we couldn't turn back up, right? Anyways, S&P 500, man, look at this. Like, early on in the morning, it was just dismal while we were trading. It looked so bad, man. And then, let's see here, when did this start? Well, around the time that we stopped, actually. And it was just all up after that. And look at this. It was just like an insane rally. And we're getting an insane rally overnight. Supposedly, because of company earnings like Microsoft and so on and so forth. But again, we get advanced GDP here coming up, so that's going to be a big data point. Let's just go look at some of the other assets here. We're getting a little bit of a jump in oil here this morning. Yesterday, a spike that kind of died out. Natural gas still low. That's looking good. Down all the way down to 2.7. Can you remember when it was like $7, man? What a ride in natural gas. Gold and silver looking not too shabby either. They reach new highs and are just kind of in the pullback. Copper still going sideways. That's interesting. So I would expect that must mean the dollar's still kind of going sideways. Yes, sir. And Bitcoins. Well, somebody tried to spike it, but it doesn't look like that lasted very long. So that's where we're at. Over here, I did make a little bit of a adjustment again to our chart here, just filtering it more because I found that some of the really big stacks were just having too much power. So even with it filtered though, it's still sometimes it feels a little bit random. So we'll see if we can maybe work something out with it. It's still super interesting. I mean, the big main thing is it looks so cool, right? That's what matters, right? Said it looks cool. Anyways, so yeah, we've got GDP on deck. Let me make sure I got my news squawk started up here. So, well, first of all, U.S. initial jobless claims, we're looking for a reading of 205. That would be up from last week's reading of 190K. We're also going to get U.S. GDP quarter-over-quarter advance headline reading 2.6% versus a previous reading of 3.2%. So if we had quarter-over-quarter GDP 2.6, that would be not too bad. We also get durable goods, core durable goods. That's another one that matters. And we get core PCE prices. So we got like a bunch of data coming out here. The treasuries are probably going to move. And I guess we'll see where it goes. I guess we'll see what happens. But that's enough data all at once that you know, we're gonna have to be a little bit careful about liquidity, right? Probably most of this liquidity is gonna pull, which can be a real problem, right? You don't want to mess with that. Let's see here. What's this for PCE? I'm not convinced it's a case of shrugging off bad news. Rather, markets are distracted. Since October lows, the market has steadily grown confident that inflation has peaked and will rapidly fall, quicker than what the Fed has forecast. That is why the same market participants believe a pause is coming as soon as next week. It's the same reason we have rate cuts priced into the back end of 2023. The Fed has said they are data dependent. The market is listening to the data. So what changes this all? Simple: inflation to turn higher. That will throw uncertainty into the equation, and we know by now markets don't like uncertainty. The flip side is, if core PCE does miss tomorrow, you can expect the risk market to remain bullish on sentiment. Yeah, exactly. Core PCE prices advance 3.9%. I think that's a year-over-year number, and if that was lower than expected, the markets could rally really aggressively. That all of these numbers, durable goods, all of these numbers are kind of important numbers. So we're gonna have some action here, guys. Let's see here. Anything else worth talking about here? Wow, Mohammed El Arian thinks that the Fed should raise by 50 basis points at the next meeting. Yeah, that's not. Sometimes that guy has like really great information intakes, but sometimes I'm like, what? You crazy. Sometimes I think that guy is crazy. Listen, there's a reason that he's not in charge at PIMCO anymore, right? He was wrong about something pretty important. We like action? I'm sure you do. I'm kind of bummed because like I was looking really good, and then I think I'm down. Well, I was down 50, I think. Two bad days in a row. And I haven't really been able to get, I mean, I've had some trades where like I was on the right direction and it just like the timing and everything of it was wrong, but haven't really gotten something to run lately. Man. There's a spread. Yeah, okay, I was gonna say, if you're the guy with the offer at 3.49, I recommend you cancel that order. Okay. Yeah, no liquidity in the micros at the moment. Make sure I'm putting limit orders. Okay, so we're getting some of the numbers. Initial jobless claims less than expected. GDP was higher than expected too. I'm still waiting for PCE. So far all of those numbers are bullish, and so we're seeing interest rates increase here. Still waiting for core PCE. Are they gonna release it? Well, so just to review, GDP 2.9 versus 2.6. Okay, here it is. PCE 3.2. So looks like it's in line. So overall, numbers that look relatively decent for the economy. GDP quarter over quarter 2.9 versus 2.6. Initial jobless claims 186 versus 205. So less than expected is good. That means less people out of work than expected. US core PCE prices advanced 3.9% versus expected 3.9%. So the inflation, that's good, really, if you think about it. Wait, isn't PCE tomorrow? There might be another. I think there's usually there's release on both days, right? Core PCE price index, and this was core PCE prices. Yeah. So what I'm seeing here is these are all numbers that are good for the economy, and good news is bad. But I would say, like, in the larger picture, this is favorable to the soft landing narrative. Okay. Inflation under control and the economy doing pretty good. So even though, like, they're selling, the S&P 500 is selling here, I don't think that this is something that should, like, turn into a disaster. Their interest rates, I'm not so sure about. Like, we're sitting right here at 3.5. I think we should just kind of wait and see what happens. The rates are definitely moving here. Like, they just moved 15 ticks. That's a little bit too crazy for my liking. So I'm gonna sit out for another few minutes or so. He wasn't wrong. He was right on. No, he was dead wrong, dude. Okay, so let's go back. What was Mr. Mohammed El Arian wrong about? Mohammed El Arian thought that quantitative easing 3 would be a really bad omen for the economy, and that, you know, you would want to, like, sell everything. And what ended up happening instead was it ended up being the best time to buy during that whole bull market. And if you had just bought on that day when Mohammed El Arian was all speaking doom about how bad of an idea this is, you would have made so, I mean, it was just like the best buy opportunity ever. That's why he lost the job, man. Just straight up, because he was wrong about quantitative easing. Maybe. What do you think of anything outside of the ETFs is irrelevant? Maybe. Maybe there's some internal stuff that I don't know about. But I think that the way that everybody in the industry thinks about it is that he was wrong about that one thing, and that's why they removed him. Like, after that, PIMCO underperformed because of the decisions that he made around that, though. Right? He was wrong about quantitative easing. BlackRock started performing better than PIMCO, and, like, they've never looked back, right? They never looked back after that, and because he lost to BlackRock, essentially, they removed him. Well, I tell you what, that Treasury bounced back pretty hard. Yields didn't really move. I think he's really good to listen to because he clearly understands a lot about the market, but he was wrong about the thing that mattered, man. He resigned because Bill Gross went back on his promise to be appointed as the CEO. I think you are right that he did resign. But at the time, I remember reading all the news and stuff about it at the time, and it was all portrayed as him kind of being forced out. You know, that it was like a, I don't know, safe space saving move sort of a thing. That was why Alliance took him. This is an interesting thing to think about, how it was like, as a trader, you kind of have to have opinions about the markets, but you also have to be real careful about like allowing those opinions to sully your investment decisions, right? Well, when I was watching this, I was kind of tempted to be like, let's go long rates. But the action here kind of suggests to me something else is going on. And in fact, we're seeing some pretty aggressive buying in the treasuries at the moment. So it's probably a little bit late, and I hesitate to get involved here when the spread is so wide, but maybe a sell at 3.5 would have made sense. Well, look, somebody got filled there. There was a brief moment when I could have hit into it. I'm still scared. There's some real buy volume coming in here though, man. What do you think? Well, we kind of retraced some of the areas. So like, I feel like that this area now between, let's say, 114.20 and 115 even has been pretty well traded, and we could just trade across that range. But which direction the flows are going to be from here, I'm not sure. There's definitely, let's just say there's definitely been some buying here in the treasury, about 10K's worth, and the net change since the news has been positive, even though we are below the opening price. And the micros are really making you pay the spread here. And look, the S&P 500 is starting to turn up as well. So are they seeing, yeah, this seems to support the soft landing, and like, oh, a soft landing is maybe not actually so bad. Maybe we don't actually have to sell the S&P 500 on a soft landing. I don't know. But look, the treasury's turned back down there really hard. There's that order right there. If we wanted higher rates, I think hitting 3.5 would make sense if I wanted higher rates. There you go. See? He took it. He's got the edge. It's bid. A tick. I'm not sure what is going to go, so I'm not going to take it. But, you know, from a market making perspective, easy call. Mohammed A. El Arian, overall favorable news for the economy that will also attract Fed attention. Yeah, I'm seeing a lot of people retweeting his opinion that the Fed should raise rates by 0.5%. I really don't agree with that one. Because what I see is an economy that's doing pretty well at the moment, but like all of the forward-looking metrics look awful, right? I'm really concerned about we could slip into a recession really quickly, and I don't know. I mean, I think Mr. El Arian is more concerned about inflation picking back up again, which is a valid concern as well, because companies are going to raise their salaries, like they kind of have to, right? Like if you're looking to change jobs right now, okay, well, of course it's kind of difficult. There's apparently the people that are out of work are having a really hard time finding work, but you know, if you happen to be in that situation, you know, it's going to take like a good 15% to convince you for it to even be worth it to move, right? Because you probably didn't get enough of a raise where you're already working, you know? Let's see here. Derek Thompson. The U.S. is not remotely close to a recession right now. Layoffs suck, but if you're fixated on the tech layoffs as a signal of U.S. economic strength, consider that they affect less than 0.1% of the economy. It's like predicting a house will fall down because of phosphor. It's not the tech layoffs that concerns me. No. It's all of those like industrial production, new orders, PMIs. Like those PMIs in particular kind of says that like we're in a recession, frankly. Well, man, we have traded zigzagged across this range. I think there's a high enough chance that we get stuck in this area that it might warrant me being a little bit like waiting a little bit longer. But I'm also kind of seeing this thing where it's like either side of this they could break out. I'm not 100% sure. Well, actually, I think it's probably the other direction. So we may be getting a decent pullback here. Yeah. So if they're likely to sell and rates go higher, or no, they're likely to buy and rates go lower. That's what the volume is saying, at least. PMIs could just be low because of the inventory buildup. You're right. I'm not trying to say that I think that there will be a recession or that it's really bad or something like that. I'm saying the probability of it concerns me. There's still kind of this, it's kind of like, oh, soft landing or real disaster, you know? And the problem is that it would only take like a small shift in a piece of data for this to like just turn into all out disaster, right? Like next month CPI comes out and it's bad, right? Then this thing just turns into a dumpster fire. Despite like the pullback and everything, volume cumulative delta is still up. So let's zoom out on our little indicator here. Yeah, so you can kind of see the big shift of activity. Couple of key shifting points there. You can kind of see when it turns around that the book kind of changes. At the moment, looking like maybe they could go for lows, but yeah, if we wanted to buy treasuries today, now is probably the best chance you get, right? That bid's doing something funky. What else? There's been some other metrics that were bad. Where were they? No, I think it was mostly the PMIs. No, manufacturing indexes, right? Well, that does, the inventory buildup, that does really... I mean, you're kind of getting both right now, right? You had an inventory buildup, but then you're also seeing like a significant decline in activity. But I think the counter side to that argument is that despite the decline in activity, the current metrics, at least, like GDP, are still really strong. So can't be that bad, right? I don't know. So I'm looking at this 75 lot in the 10-year micro, and I'm kind of wondering what's going on with that. It seems really flighty. I'm not sure I understand why the big order is on the bid, though. Is it because that's just the trend, and the expectation based on the trend is that they've reached the lows again? I don't know. If you watch the volume, at least in the 10-year, another thing we should note is that like in the 5 and the 30, the volume is to the downside. But like we've only shifted like a basis point off of this news. So what do you think of that? That's awfully... Well, there you go. They turned bullish again. Okay. Is it equal to about 5 basis points from yesterday's close? That's probably true. Because there was a decent shift overnight, right? I'm talking just how much it's moved since the news release is less than I anticipated, I would say. So I took an entry. It didn't end up being a market order. It ended up being a limit order that somebody hit me and filled me with. But I did get it to go my way. So I would say overall an A. But clearly, because of the spread and everything else, in order to make money on this, we're really going to need to see some more buying and an extension above that, like 28 that they touched before. So but I guess what I'm wondering is if yesterday we had this thing where like we had news, right? And then we kind of had flow come out of nowhere that seemed contradictory to the news. And I think ultimately that there was a large sovereign wealth fund or something like that just had to do something, And I'm wondering if that's at play here as well. Like somebody is buying, and they're buying a decent amount as well, and it's doing so in a way that's kind of sneaky, you know. So it's not. It could be a reaction, like a delayed reaction to the news, but it could be unrelated to the news. But it did come through. We didn't breach that swing high, but some long volume did come in. You know what? Actually, though, I think you're pointing out something else there. Is you're saying that UB was 3 basis points. So overall, there was still some steepening, huh? And I mean, if we reach the highs, you would. It's not a guarantee, but if you breach the highs, the tendency would be, as of late, for steepening. Okay, so they equaled the high. I'm just gonna clear so we can see it a little bit more clearly. I guess another kind of sign that we've got going here is that liquidity is okay. We're putting up 1100s, but it's not. You know, the other day when we had a really strong move, there was really strong stacking after the reversal. So this could be part of a spread trade, because I'm seeing outright buying in the 10 and outright selling in the 30. The volume in the 10 is such that I think I would lean towards the orders in that one, but it means that our signs are still very wishy-washy, right? Like we made a good call on a little bit of volume coming through. What's the next step? We're not getting a whole lot of information. I'm sure that when it actually goes, it'll be really obvious, but yeah, see, that offer at 28 is looking a little bit weak, but like they're not quite. Yeah, okay, so they took it, but the bid's just not very good. About 1,000 contracts traded back and forth there at that price. End of the month, yeah, well, oh man. End of the month will be lit. China manufacturing, PMI, Japan 2-year auction, and industrial activity. What is IND government? But I don't know if those ones are super important, but well, all of that is on the 31st. Wow. Yeah, and then the Fed and the ECB. Yeah. This is, I can't remember the last time that we had a Fed meeting like at the end / beginning of the month. I know that it was recent, but I can't really remember what happened. But I would think that the kind of like the end of month flows and all of that sort of stuff next week are going to be like really, shall we say, confusing. It might not be confusing. It might just be really clear one direction, but having that Fed meeting at the end of the month is definitely going to lead to is an interesting setup. Let's put it that way. Right. And then the crazy thing is that it's going to be like, okay, they do the Fed, and then immediately after that, it's going to be next jobs number, next CPI number, etc., etc. So February could be a little wild. And you know what? In the S&P 500, we are seeing what I've been saying like all week, right? Everybody thinks that 4,000 matters. That just means it's going to chop across it. And like, we're so close to a Fed meeting. It seems really weird to me that so many retail traders want to come in and take up like a strong position on where the S&P 500 goes next before the Fed meeting. It's not going to go anywhere, man. It's just going to fight. It's just going to fight until the meeting. I just got on the stream what made you short yields. I figured the news would be bullish. Yeah, I think that I agree with you. I would have thought that based on, well, I mean, the knee-jerk reaction was higher rates, right? But the flow is going the other way. Granted, that could shift real quickly. But listen, here's the thing. The news was all good. It's like pro soft landing, okay? It's not like pro like, oh no, we got to be concerned about inflation and the Federal Reserve is going to be more aggressive with interest rates, and you know, it's not that sort of a thing. So do interest rates need to go measurably higher from here? Not really. And that's why you kind of get this thing where, yeah, you can kind of justify going both ways, because it kind of suggests to me that the next set of orders may be based off of other factors, right? Lucas disagrees, of course. You know, it's like what you want in the numbers right now. Oh, I don't know what you're talking about. in the numbers right now, what you want to see is just mildly good, right? You don't want super good, you just want mildly good, and that's what we got. And mildly good for the treasuries means we can do what we want. So the orders are long. Hey, maybe somebody really thought that these numbers were going to be bad and we're really going to raise interest rates, and it doesn't happen, and they're unwinding their position. That could be going on. Either way, we have some sort of a meta order that is long in the treasury. We're not seeing it in the 5 and the 30 quite yet. They're mostly sideways now. But if the and we did breach the previous swing high, so if we can get another impulse of orders long, you might be able to see that the treasuries really pull out. I definitely use Delta in my trading. So again, the whenever you guys ask me a question like this, it's always going to start with, do not apply technical analysis to order flow, okay? But as a confirming indicator, it's good, right? If I get in a trade, if I go long, I want to see cumulative delta increase after I get into the trade, right? And generally speaking, if there's a large meta order going on, you should see auto correlation in your cumulative delta. I wouldn't say that we're seeing super strong autocorrelation in our cumulative delta right now, but it is up. It is up, and this is maybe the third leg of this that we've had. Yeah. I also use delta to judge my exits. I base my exit on, I want to see cumulative delta shift a certain amount. Okay, now we're seeing some more volume come through, and it looks like they're piercing through the news price and the highs of the regular session. And we're awfully close to that 115 area. So since we've taken this, it's been about well, that's only 5k more, and then there's 5k from the bottom, so it's still about roughly about 10k orders contracts long. Like I was saying earlier, that was a lot of important data that we just got, and the market was kind of nonchalant about it. We can do what we want, but what do we want? Well, I want lots of things. I'll always say to myself, nah, you know, I think I have everything that I really ever want. I think I'm lying to myself when I say that, though. Then I find new things to get. I think the thing is that I'm more fickle than I want to admit on like what I want, because you know it's an ADHD thing, right? So I would be prone to making impulse purchases, except for that I just don't like spending money, so I never do that stuff. I've kind of trained myself to like go in, research something about a thing, you learn everything about it, and then not actually do it. So my latest obsession has been snowboarding. I haven't gotten too much into the equipment. I'm just kind of still scouting things out and like the places that I can get them, and what the secondary market is like. I'm not too sure because every time I'm like, let's go skiing, my wife's like, let's not. She doesn't want to do it. Doesn't sound fun to her. But I remember when I was a kid that I was like, that was all I lived for, man. There were times where I felt like that was all I lived for. Like the winter season would end and I would think about it every day. Right? And now I see it on TikTok. It's like, I want to go snowboarding. So we'll see if I actually get one, or if I just go by myself, or find some friends to go with, or if I'm able to drag my wife with me. It wouldn't be very fun to be, you know, go have all of the fun without her and leave her with the kids every weekend. But if she's gonna be a party pooper like that, may just have to. I'll get the kids snowboards, teach them how to snowboard at 5 years old, and she can just stay home or at the lodge. She can stay at the lodge. I did get a graphics card too, by the way. Found a good deal. Well, it was an okay deal. It was like $350 for a 3060. But I decided to go for that. And what's good about it, about skiing? Oh man, I don't even know how to express it. There's no other activity that's like it. Because, you know, like you go sledding in the winter. We go sledding. That's fun. Just going down a tiny hill. And skiing is like, you know, the same thing, except for that each trip down the mountain is like 30 minutes. I love it. Okay, so few orders into 115 even. Not as much activity here in the micros on the lows as I would like, but man, there's a lot of activity. It happened at 3.511 that I really missed. By the way, on that latest jump up, so first of all, the 30-year like really jumped up. So we're actually on the spread actually slightly flatter now. And the 30-year is still kind of going on, and the 5-year I never really caught the volume. So that means, you know, if we do get another, I mean, this might be it. They might be looking at like I should be taking profits here, right? But if we do get another extension higher, I think you could see a lot more volume in the 5-year. So, you know, I think this could be like a 25K move net. I think it should be at least that. I don't know. I think one of the things that's been making it difficult for us to trade is that this just seems to be a really illiquid market, right? Like there's just not enough liquidity to execute the meta orders that have been going through the market this week. And so it moves it a lot. And that hit at 25 in the 30-year really was, there must have been somebody in the 30-year stopping out there. Yeah, now I'm seeing a little bit of pushing in the 5-year. Some more. I'll reset them right there since that kind of seems to be where they're all lined up to go higher. The 5-year, maybe it's 177 instead of 175, but yeah. Okay, see, I'm hitting into the highs. So, let's. I want to do a poll here, shall I? Maybe we should just ask Akshay what he thinks, but no, we're gonna make a poll. Knob spread, steeper, flatter. So we flattened a little bit. Do you think we'll continue to flatten, or do you think we'll go steeper? The tendency has been when we're having uptrends to go steeper. So this is kind of a key inflection point, decision point for spreads, and I'm not entirely sure which way it's actually going to go. So I'm going to ask you guys. We'll see if you guys have a strong opinion on it. Well, you already got 3 votes on there. I'll just leave that one up for a while. Give everybody an opportunity to weigh in. Fitch ratings, rising default rates, and net downgrades are expected in Europe's high yield bond and leverage loan markets in 2023. Oh my gosh, the Babylon Bee just tweeted 99% of Americans support sending Mitt Romney to fight in Ukraine. You know what? I think I have to agree with that one. Yeah, I think we should send Mitt Romney to fight in Ukraine. You know what? I think that Mitt Romney as a soldier who could actually be surprisingly effective at it. You know, maybe if he was younger. If he went into the military, I think he'd be good at it. Do you think Mitt Romney would be good at the military? I don't know. The thing about Mitt Romney is he's excessive high conscientiousness. That makes him a good CEO. Really does. That's why it probably would have made him a good, an okay manager president. The thing that bothers me about Mitt Romney is he just goes whichever way the wind is blowing, you know? Okay, well, We definitely had some good volume to the long side. Not nearly as much volume in the 5 and the 30 as I was hoping we would see, but they did kind of fall back kind of quickly. There wasn't much volume yet. It just kind of fell. I'm wondering, you know, one of the things that happens or one of the setups that you can do as like somebody executing an order is you know, if you want it to be going up and you're not getting the stuff that you want, you can kind of like cancel your bids and let it drop back a little bit, and that can kind of like reset things and cause people to reload so that when they come up the next time it actually does go through. That's kind of like the ascending triangle sort of setup. The ascending triangle is like the one chart pattern that's like, man, I feel like whenever I notice it, it does end up going higher, you know? I'm going to bet that if I actually went and did the statistics, and that's kind of a hard pattern to kind of like test for, well, I don't have something to identify an ascending triangle. Sure, we could find something, but it'd take a little bit of work to test, okay? So I haven't tested it. I'm going to bet, though, that if I tested it, that there's no edge to it. But whenever I notice it, it sure seems like it goes higher. Do we actually get some volume traded at 115 even? Well, one contract. One contract's better than nothing. Or the bid is decent. It looks like they probably should take that price. They probably should clear it. And with that, it looks like, now this is interesting, is that now it's like the 5 and the 30 kind of led the way on that one, and the 10-year lagged a little bit. Do you see it? Like the 5-year is up 2 ticks from the 10, and the 30 is up 1. So you're getting a little bit of a shift in the curve, but it's the 10-year lagging. Probably because the 10-year knows there's probably going to be some liquidity at 115 even. There's a level break setup right there at 31.5 though, or at least what I would consider a level break setup in this environment. I don't think that the uptrend is clear or aggressive enough to say that this is one that you should take, because in normal action it's 50-50. But in strong uptrending action, you buy it every time. I don't think that we're in strong uptrending action yet, but we're kind of like, we're getting hints that we're in strong uptrending action. So there's that. But we should note that despite being accurate at the highs, the volume has shifted. There was some selling here in the treasury. And the S&P 500 has kind of started to get a little quiet, huh? Maybe for this this indicator that I have here, maybe I need to just set the colors based on hard thresholds. Because it's just too fat-tailed. When you get a big reading, it's so much larger than everything else that you get no colors in anything. So I would either need to run like a complicated statistical analysis to like cut off the outliers, or which I honestly don't know how to do that. At least not off the top of my head. I'm not sure how you set that. Wow, they just cut through 115 like it wasn't even there, man. After being so shy about it, they just only 12 contracts and then 1,000 at 0.0.5. Like there really wasn't the liquid. Usually that 115 would like iceberg and stuff first. Change the colors to black and white. Okay, well, you can do that. You can change the settings to do that. But if I just changed it to be like, okay, full yellow is, or full opacity rather, is 1,000 or whatever it is, you know, the colors would probably be a little bit better looking. Okay, so that was a really good extension there. You've got some trap traders here. This is turning into a pretty decent trend, isn't it? This is a lot like Tuesday. This is a lot like Tuesday, isn't it? Jeez. So like the thing is that again, normally there would be a lot of liquidity at 115 even, and they're just slicing through it like it was nothing. Now there was this sell from before the news, and we're reaching into that area now. So that area would be from 020 to about 03 half is like the single prints, and then like the start of that is like 06. So essentially we're still in an interesting range. And again, the net change in cumulative delta is only actually 5k net, but I am seeing selling in the treasury and the 10-year at least. So this has been a really amazing trend, but I am a little nervous because my volume is not coming through, even though we're pushing so hard up. Yeah, the single prints, the single prints. I'm not trying to say that there's anything special about them. I'm just trying to note where the context is, right? So the context is we're still not even to the overnight high, not even anywhere close. Yeah, so there's some interesting structure above us, right? But again, this has been a really strong uptrend, and the volume is not really super autocorrelated with it. So that always makes me nervous. I'm also kind of seeing a thing where like well, I have a limit order out there sitting right now, but I'm kind of scared that won't get filled. And like the spread in the micros is still too wide, man. They're not giving me a good exit. Well, again, the key thing here is I'm not saying, oh, well, because there's a single prince above us, we're going to continue to go higher, right? It's just like trying to find a benchmark to say, how strong of a move was this, right? So like, for me to be like, wow, this trend was like such a monster bull trend. This really changes my opinion of the markets, or there's something really big going on that I don't know about. That, you know, for me to start to get into that mode, we're gonna have to break the overnight highs, you know, and we're not anywhere close to that. So to me, this is still like a mild trend. There was a stack there. What was that about? Oh, it looks like it was 28. That was way above us. Oh, it was way back here. It was that big order that just showed up. So you see them running away from me. $10 there. Watch it turn right now that they scared me out. That's exactly where it's gonna shift. Nah, I don't know. Let's see if there's actually volume trades at that 115, right? So we know that at a round number there tends to be more activity. Now that we slid through it and they're trading it again. Yeah, let's see. I think that for me to have gotten out on that at the prices that I wanted, I really would have had to have had that limit order out when they were pushing that high. So it's not bad. $25 isn't bad though for a day. And it's still really early too, so we can get back in. I have to see, the S&P 500 is kind of getting interesting. Like, well, so they're higher than they were before the news, of course. But it's kind of high, you know, 64, 65. Are they really going to go to 4,100 today? I mean, like, that's kind of the next step up there. That seems a little, I have a hard time justifying that level. So I think the S&P 500 is setting up for a big rumble on the open, yeah? You know, the problem with TA as a TA trader, because it wasn't a technical loss. Well, I think that the problem with TA as a TA trader is that technical analysis is not effective at predicting anything, right? Yeah, here's what Steve Leishman, you know, I was trying to express this earlier in the stream, but I really like the way that Steve Leishman is saying it here. Hard to remember when the economic data looked so good and forecasts were so bad. 2.9% GDP and declining jobless claims, yet confident predictions of coming weakness and recession. Hard to say if we should follow the prior resilience or the present weakness as the best indicator. That's exactly it. This is like the forward-looking stuff that I see doesn't look good, but the numbers that we just got did, and I'm not sure what to believe anymore. Well, what price did I get out at? How good of an exit was that? 3,475. Well, hitting into it when it was the offer. Okay, but it's still within the spread, so I might have been able to, I might still be able to be putting a bid out there. So, so far my exit is looking like a B or a C. Yeah, not sure if this is relevant, but something like 90% of corporations have a bad outlook for the near future. Whoa, there's a big old offer just showed up at 31. What price? We were just talking about the price that I got out at, right? For that matter, a big offer showing up at 31 does not necessarily, from the work that I've done, say you should sell it here. In fact, sometimes it can kind of be a trick, and it reverses higher. But given the context, that showing up there is really interesting to me, because we've kind of had a decent bit of downtrend here. We're retracing, we're pushing some of the last swing low as well. Let's clear below us here so we can see that. And again, remember what we said when we started the trade was like, well, it was mildly good. That kind of means that maybe we can just do what we want. I'm not sure why they're buying it 100%, only that it's totally within reason to see some buying, and that there appears to be some sort of a meta order. Now, it looks to me like we're getting a meta order the other direction. I mean, come here and look at this on the cumulative delta, right? So see, we came up, and that's what I was looking at. We saw that, and I was like, oh yeah, we're probably gonna get should see autocorrelation continue to push us through, even though it's a little bit gappy. I would prefer it to just be like straight consistent line, but look at this one. This one is almost like straight consistent line down, so that is a little bit concerning. The flow looks to be much more consistent on the downside, and then you put on top of that like a big offer showing up and all these other things, and it's like, well, the reason that we took this in the first place wasn't like this was a huge shift in expectations, right? We kind of said, well, the thing that's moving us up might have nothing to do with that news, right? So that means we should be cautious. That's why I got out when I did. Otherwise, because normally I would love to try and let something like that run, So I think we pulled that off pretty good. I think we pulled that off pretty well. Look at oil, by the way. What is going on in oil? Wowzer. Well, it was up overnight, but like they've really extended here in the regular session. It's funny to, I guess this is a good example of why it's very important to watch multiple markets. I think that futures traders in particular are really prone to doing this, but stock traders, they do it too. It's just in stock traders, they only look at stocks and they don't look at like what is copper, what are interest rates. You got to look at all of the different asset classes and see how they react to a piece of news, because if we're trying to sort out, we got a new data point, what does that mean for the economy? Was that piece of information speak well of the economy and the near-term future, or bad of the economy and the near-term future, right? And if you're only watching the S&P 500, or you're only watching the Treasury, oh, by the way, that offer canceled, so they might flip back up here now. Okay, if you're only looking at those things, sometimes you can get bad signals, because like I said, with the S&P 500, it's kind of like good news is bad and that sort of a thing. So all of that is a really long roundabout way of saying that I think that oil's strength this morning suggests some confidence in global recovery, at least from a global perspective. They think that China is going to continue to open and that economies will continue to grow, and that we're not they're not expecting like a disaster to come through, at least. Did it print? It was at 28. Oh, no, wait. The offer was 31.5. I don't have any prints there. They kind of were like right at it, and maybe they did touch it. Actually, we should be able to see from this, right? Oops. If we zoom in here. Actually, you might be right. So there was 25.59 that traded up into there. And now we got like this big bid way back at 28 now. The bid is really, really big, right? It's 4K. That's a really significant outlier, relatively speaking. So another thing I would say, or that we should say, that we should consider, man, I'm all over the place today, aren't I? Right? I think this is one of those situations where like I don't have a super strong opinion on which way it should be going, and so we're just kind of reading the flows as they come in, and so we're just kind of noticing everything, and so I see every little piece of information as something significant when in the end it's maybe kind of all a wash. So just keep that in mind. But I find it curious that we're seeing large orders here. And I was seeing the first large order. I was like, okay, well, we had a little bit of a reversal. So seeing somebody stack on the offer now here is, it's interesting at the very least, right? But now to see a monster bid at 28 as well, right? That's really, really curious. But I think that makes me less inclined to want to get involved in this market. Because one, that could just be manipulation. We don't want to reward that behavior. It kind of makes me feel like we're not likely to get strong trends anymore, right? That this could be a little bit of bite and chop now. The upside came through as far as it could. There was definitely some people in ZB that got stopped out there up at the highs, but the cumulative delta never really came through, right? I feel like that was our chance at getting a monster trend today, and that it's kind of over. Comes back, and then you start seeing that sort of stuff. That's like, yeah, don't mess with it. I think our exit was a B plus, because it would have been nice to get the 10 ticks. We missed 10 ticks for sure. Okay, I don't know if we ever would have gotten filled. I mean, look, the price that I was trying to get filled at, there was only like one contract ever went through there, right? So for me to have gotten filled there would have been very, very difficult. I might have been able to get 4.7, but so given the conditions, 4.75 wasn't awful, and the exit was correct. I did read things correctly. So I feel like with my trading today, recently, it's like we need to improve our hit rate, right? Our win rate's not been very good. And when I'm wrong, it's like I don't even get favorable ticks. That's not very good, right? So that's a really big problem. It's going to be very, very difficult to be net profitable if we're doing that too much. Okay. But once we're in the trades and we're managing them, I think that we've done an okay job. I haven't had a situation where like I took way more risk on than I should have, or I took like a really massive loss. right? They've all been like multiple small losses, so that's better. And usually when I do get out, it was a really good idea to get out because it would have been much worse. So my management of the trades have been really good. And except for that move Tuesday, I tell you what, Tuesday was rough because I got out based on, you know, I didn't think that I had much time left and all of these sorts of things. And that thing, I wasn't even halfway done. That could have been a monster winner for me, and I got out way too early on that one. But I'd still say that my management has been pretty good. So don't laugh, George Santos could become president. What the hell? I feel like the media is more interested in George Santos than they should be, but whatever. I'm not joking. I'm worried that Santos or another charlatan just like him can become president in the United States one day in exactly the same way I said it in 2010. Yeah. On that, he's right. George Santos specifically, no, because you caught him too early. But what I see in our world today is like really obvious scams that go way further than they should. And man, it's funny when you get to one of those things, like you have the thought and it's like you almost don't want to say it, but it's not like what I'm gonna say is controversial or anything like that. It's just, this is kind of hits hard. Like 2021 really damaged my view of humanity and the public, man, because it was like you turn the faucet on and everybody just goes crazy, and like you know that it's insanity when it's happening, but everybody goes for it anyways. And yeah, they're just throwing money at everything that they can and into the dumbest scams. This whole thing that happened in Bitcoin, like FTX and all that, I never looked at FTX and was like, well, there's something sketchy there, and here's the things that don't. I was just like, that whole space in general, you don't want to touch it. It's so obviously inflated with money that doesn't exist. But sure enough, what happens? It falls apart, right? The number of people I see over and over again in the influencer space, people that have no clue what they're talking about, get huge followings. Yeah, it really, and how do they do all of that, right? They're using like some of the cheapest, most base primal level sort of cheese. It's like they're cheesing their way to popularity. You know, cheesing, like when you're playing a game and there's a tactic that you can use in the game that is really easy to implement and is really, really strong, relatively speaking. And so you just focus on only doing that one thing, right? That's cheesing. I feel like that it's just like cheesing your way to the top. It's like, I hate it. Zergling. Yeah. So a 5 pool Zergling rush is cheese. Yeah. Really, really easy. Like the simplest strategy in StarCraft you can possibly do. Super, super powerful. Especially if they don't know how to react to it. So even the pros at the pro level will lose to a Zergling rush. Not all the time, but some of the time they'll lose to it. So you have to fight. You have to fight it with your drones. Oh, StarCraft. You know what? I've realized this year. I love StarCraft more than I realize. Maybe that's what I need to do is play StarCraft. You'd probably kick my butt. I think that I gave up on it because I'm just not good at it, but I enjoyed it. And I could get good at it. I think I know now enough from watching like professional matches, like how the matchup tends to go and what it is that I need to do. I can know so much more now, so I feel like that I could be okay at it. But it's all the things that I'm bad at, right? Management and juggling multiple things, and yeah. Not necessarily good at it. Well, I don't want to call it too early, but so far we have been still kind of meandering in this area below 115 even. Although we didn't breach down through the bottom of this and get to this big order and all that sort of stuff. So far our caution has been warranted. Anyways, there's a new real-time strategy game coming out, being developed by a bunch of people that were working on StarCraft 2 and left to make their own company. It looks very, very promising. I'm hoping that it will revitalize the real-time strategy space, and maybe at that time I'll be in the mode where I can play that a ton. I also really want to play a shooter, but man, the old shooters just don't do it for me anymore, and the new shooters are all dumb. Hasn't been anything really engaging in a long time. I guess if I was gonna play anything right now, I'd have to try Valorant, but I think right now it sounds more fun to me to read than to play Valorant. So I've been studying for my test. I got my note cards. I keep making more. And I have a bunch of topics still to go into to make cards about that I need to go a little deeper on. Like that, I think the ones that I seem to be missing the most are like the different types of trusts and stuff. And that should be easy because there's only like 6 or 7 of them, and I just need to memorize the definitions of them. I do wonder sometimes my practice tests, if my practice tests are harder than the real test, because so like one of the ones that they'll do is they'll like give you a bunch of indicators and they'll be like, which one of these is not a leading indicator? And it's like, it's a bunch of economic reports that you don't really think about. So the hard, some of them are really hard questions. Or like, which of these is not on the balance sheet? Or which of these is on the balance sheet? And they're all things that you're like, there's no way that's on the balance sheet. And then it turns out that like equipment is listed on the balance sheet as part of fixed assets or something. You know, some of them are really hard, tricky questions. And so you just got to memorize the things. You just got to memorize the lists of all the things. If you have the list memorized, then it's an easy question. And can I memorize everything? We'll see. We'll see. Hopefully I get more time to get in there and really finish up, because I'm kind of sitting here like, oh, I wish I wasn't still going through and all I was doing was just looking at the cards and memorizing the cards. Maybe that's wrong, because this stack right here, this stack of the cards, I've pretty much got that memorized. And it's just like these new ones here that I added last night. So yeah, they're going for the open first. Price levels aren't very predictive, but there are some price levels that the market seems to react to, and that you'll tend to see at least more activity at, and they are open, overnight highs and lows, moving averages, like 50, 100, 200 day moving averages, right? Now there are some other price levels that people like really care about that are meaningless. Okay, so I'll tell you the ones that I think are useless. Floor pivots, useless. Fibonacci levels, extra useless. Okay, but so 114.29 being the open, doesn't surprise me to see them coming there and seeing a little bit of jostling there. Do orders move price? Generally speaking, yes. I'm realizing today that, like, you know, I say orders move price. It's true, orders do move price, but correlated instruments also move price, right? Like, there's always a little bit of extra nuance that we can go into on that, right? There's always the extra level of nuance. In this particular case, like, we had that strong uptrend. It came in the 10-year and not the other ones. I don't know if I'm not 100% sure what drove that move. Someone who speaks sense. Oh, thank you very much. I try hard. I try super hard. Let me tell you something. I did not come to these conclusions because I was super smart or any of that stuff. Really, what it come down to is I was really lucky to get some help before I ever even started from some real traders at a large institution that kind of set me on, you know, helped me understand that the market was competitive. That was the thing that I understood the most at that. And that helped me avoid a lot of problems that probably would have killed me and make me blow my account so quickly, you know. But I knew that what I was doing was hard because of that. I knew what I was doing was hard, so I was, you know, I didn't throw tens of thousands of dollars at the beginning. That's how I've been able to stick around for so long, right? So I was really lucky on that. And then, you know, we have this stream, which just kind of ended up being a coincidence that we made this in the first place. You know, I didn't come in and like, oh, I'm an expert, I'm going to come and make a YouTube channel. It didn't start like that, right? And then we got some good info from this channel, and really what happened was I just hit my head against the wall so many times that I was forced to just continue searching for more and better information. And eventually we found some empirical information that really helps us understand what the market is. So I didn't come up with these things myself. I'm using empirical research to say these things. You know? So it's not me speaking sense. It's I stand on the shoulders of giants, I guess. Okay, question. Do the central banks around the world tend to follow the Federal Reserve? For example, once the Fed raised the rates, 1 week later, our central bank did the same, and it was like that since Corona. That's a good question. So like we spoke about yesterday, there's the Bank for International Settlements, where all of the different members of the major central banks regularly, so like the US Federal Reserve, the Bank of Japan, the ECB, European Central Bank are like the biggest members, right? But you know, there's like a dozen of these guys, right? And they do speak with each other, right? So it is very much the case that, like, they know that the Federal Reserve is thinking about raising interest rates, and they adjust their policy accordingly, which is to say that, like, if you know the Federal Reserve is raising rates, you better have a really, really good reason why for your economy you need to leave things or reduce rates, frankly, right? Because you know that the Federal Reserve is going to do that and it's going to hurt your currency. So I do think that they factored that in, right? and I do think that they kind of all follow them, the Federal Reserve, to some extent. Like, if the Federal Reserve is raising rates, you don't want to be the one that's not, because it's going to hurt your currency. It just is. But I also think that, you know, the factors that are affecting the Federal Reserve and causing the Federal Reserve to raise interest rates are, generally speaking, going to also be affecting other countries. And so they're all going to tend to be moving in the same direction because they're all affected by the same things in the global economy. And the way that things are set up is basically like the Fed usually gets to go first. I mean, it kind of shifts a little bit, but most months it's the Federal Reserve goes first, and then, you know, like next week it's going to be Federal Reserve on Wednesday, and then I think the ECB is on Thursday, right? There's not a coincidence that it's like that. The Europeans intentionally have it that way, right? So that's what I know. That's what I know. And I would say it's always been like that. It's just that we weren't really aware of that because the central banks weren't ever raising rates ever before Corona, right? Well, I think they nibbled a little bit at 28, didn't they? There's not 4,000 lots there anymore. There's only 3,000. It's kind of feels to me like that order is serious. Just flip a coin, shout America F yeah, and buy, press, or sell. Yeah. I'm concerned that my win rate this week is not super high. And I am concerned that I think that I have good reasons to get in, but we haven't actually been getting that much significant economic news, and that I really am just like flipping a coin and going America F yeah, and that whatever edge I have has been more in the management of the position. Because I really want to be in a place where I'm winning most of the time. You know, I win most of the time, and when I win, I'm getting more than 10 ticks. And that has not been the case this week. Just has not been the case this week. And the one that really concerns me this week is that, you know, I had those situations where it's like it took 2 or 3 losses in a day. Or it had like streaks of like 3 or 4 losses in a row between days. You know, we don't want that. We want to avoid those. And when I, you know, for if you're doing technical analysis, then like sure, that stuff happens. Okay, but if I actually have an edge, that shouldn't be happening. So that says to me that Seth is making trades when he doesn't actually have an edge. And he's not aware of where he has an edge and where he doesn't. We got to fix that, right? Trade ZT just one. Why? I'm concerned if I traded ZT that it would just be even more of a coin flip. There might be some situations where I can trade it and it'll work, but I tell you what, the 5-year, so like forget about the 2-year for a second, just the 5-year. You know, I traded the 30-year for a while. I've always been the 10-year. The 10-year is my love. The 10-year is the love of my life, almost, you know. I missed the 30-year. She does some crazy things sometimes, but ultimately the 30-year didn't work out. All right. So we're in the 10-year. And here's this 5-year over here, all the while, the blonde. And there's some interesting things about her. Like sometimes she really moves and stuff. But ultimately, I'm not sure that it would work out with the, I don't feel like I understand her. How she's different from these others. I seem to have a hard time. Like, of course I know how it works, right? Because you know how it relates to duration and stuff like that. Like a change in the interest rate is going to move the 30 years more, like the price of the 30-year more. But the 5-year is going to be more sensitive to short-term things, right? That's like the one clear thing that like we really know. But like how that plays into like, okay, how does iceberging and large spoofs tend to work in the 10-year as opposed to like the 30-year, for instance? And I mean, the 5-year has been up there the whole time. I'm always paying attention to it and everything, but I just don't understand her, man. She's a different, it's just like on a different wavelength. I don't know how to explain it, but it's just, I feel like that the 5-year is always kind of doing things that I don't get compared to the others. You know, like in this instance that we had here this morning, I was saying, well, it looks like the 10-year is dragging them up here. We are actually flattened a little bit. We might actually see some more volume come in long in the 5-year, and I did see them biting at it a little bit, but like ultimately it sputtered out and nothing really happened, and I was just kind of like, what's going on, 5-year? You know? And ZT is that girl that everybody keeps telling you about, but you've never met her. That's ZT to me. You want a tip? Oh, of course. We're a tip about the 5-year. Hey, look, they cleared the 28. I'd say 4,000 contracts went through there. That guy wanted to be filled. You can't look to be exact in the 5s. You have to scale. That's probably true. Well, I don't know. I mean, so if you're just all in, all out, and especially it's an instrument that's a little bit more, shall we say, finicky. Let's just compare with the S&P 500 for a second, right? The exact price that I get on the S&P 500 is often just a little bit of luck, right? And I feel like that those differences on how good of an entry you get kind of like tend to wash out anyways. So if you enter with multiple contracts and kind of work the range, does it in the 5-year, does that like change a whole lot? Because in my experience, it doesn't. It makes it easier from a mental perspective to deal with, because you're able to build like that profit right away and then use that, and then you don't have much at risk, and it's just a lot less stress, you know. But on the other hand, if the 5-year, you know, we tend to sit there for a long time, and the 5-year moves around a lot, and there's just a lot of opportunity to make a few ticks within the range, then maybe that would help. So the thing with the 5-year is it is the origination basket for the ZT and Z3N. ZT derives ZF. It's kind of disconnected from the ZN UB curve. It's more that. Oh, dude, that I feel like that what you just said there very well explains why I feel the way I do about the 5-year. That's interesting. That kind of just brings us back to this old conversation that we've had like a trillion times, which is, can we find some room for the 2-year on our screen here? And would it actually be of benefit? I don't like changing my screen. In the early days, we change it a lot, but these days I don't like change. I just want everything to stay the same. Well, since they traded that iceberg at 28, they are a little bit higher here. And we did get a piece of news at 8 o'clock. What was that piece of news? Oh, it was new home sales. 0.616 million versus an expected reading of 0.612. So a little bit better than expected. Change month over month was 2.3% versus an expected negative 4.4%. So that's good. That's not a data point that I typically see the market react to too strongly, but I would have expected the Treasury to sell a little bit more off of that, don't you think? Let's see, here's the problem with what Akshay just told us, though, is so you're talking about SR3. Understanding the Eurodollar / SOFRs, that is like a completely different beast, man. So I have got this book. I wish I could remember the name of it. I haven't finished it because it started to get a little bit too deep in the weeds for what I was doing at the time. I want to revisit it, though, at some point. And the reason why I say that is so he would come in and he'd say, okay, here's the E-mini. Let's model the statistical distribution of volatility in the S&P 500. And then he would say, like, here is I forget what he called it. It was like an error adjusted something sort of distribution. It was basically saying, you know, this thing is trying to follow something, and then when it ends up being wrong, it moves to adjust for what it was wrong, and that's why you get these fat tails. Anyways, when you search the internet for this term, like, you'll find stuff, but not very much, you know. And I was like, well, I need to understand a little bit more about statistics and modeling these things in order to follow what he's even talking about, right? But I'm like reading through it. I'm like, okay, well, like, this kind of makes sense. This is kind of a little bit useful. You know, he's talking about the interest rate market, and he's talking about the ES market, right? And so there's a chapter on each one of those things. And then there's a chapter about the euro dollar. And you think, oh, okay, well, the euro dollar, since we've already got a lot of information and everything, we should be able to, you know, it should be relatively short, right? No. Like the chapter that this guy had written on the euro dollar was like 3 times bigger than either of the chapters that came before it. So, like, the actual statistical behavior of, like, the SOFR curve, it was basically more than I was able to handle at the time. So that's kind of a part why I like when we just talk about getting into the shorter end of the curve. It kind of scares me a little bit. This is because it's like my tools don't work there, right? My tools have all kind of been set to work on the 10 and 30 year end of the curve. And it would be a lot of new stuff, and from what I can tell, the new stuff is like just a little bit more sophisticated than where I'm at. Is that fair? Actual arb between stir curve and treasury curve happens in the 2 years, so for the 5 year, it's good to know, but can be ignored. Yeah, I mean, in all fairness, for what I do, you could do it on the 5-year, right? Like especially if we're primarily relying upon news and any sort of information that we might glean that suggests certain flows coming into the market going a certain direction, you certainly should be able to catch it in the 5-year. And like Octavius was saying, it seems like it's really hard to catch an exact spot in the 5-year, but you can kind of average into it. I mean, what I like about the 10-year is that I'm able to make a relatively, like, let's say 50%. Like, if you're able to catch the extremes even 50% of the time, that's like really good, you know? Like, I don't have to risk a whole lot in the 10-year, because if I'm getting a winning trade, it usually just goes my way. I know the spots where there's kind of going to be some liquidity, and where the orders, what the timing of the orders that come in and everything. So I don't have to have that extra little buffer of randomness, you know, because there's very little randomness in terms of price movement, because all of the randomness happens in the shift between the best bid, best offer, you know. I mean, there's some randomness, but, you know, it's the least amount of randomness out there. This is how I feel. So it makes it very, very, very easy for me to manage my risk in the treasury. And you just, in the 10-year, you just don't get that anywhere else. I guess if I was trading the 2-year or SOFRs, then it would kind of be like that too, because those are super thick instruments. But so oil was looking like super awesome this morning, right? They have turned down super hard, and the S&P 500, man, we only been open for 30 minutes. It feels like it's been an hour or two. But the SPOO's not looking so happy. Not looking so happy. Maybe what we should do is we should come over here and we should put Santa Fe on the S&P 500. Wouldn't that be fun? I don't think that we get nearly as many like outlier sort of things, so we might not have to filter as much. I will still put the level filter on. So let's see here. We'll do max level filter of 10 and do the bottom margin, so you don't get actually the bottom margin probably has to be more like 25, and the text size 14. Let's try that. So what I'm just realizing is that I haven't been paying very good attention to what the S&P 500 is doing, because that chart's not there anymore. Also, it's kind of a wild ride in the dollar, huh? For some reason, this chart is being a little slow. When I mouse over it, it's not showing me my cursor, so close this one. Yeah, we'll close this one for now. It's probably just that I need to zoom in. Yeah. Okay, so better. Okay, let's hold it at that for a bit. Oh, not that far in. Jeez. Come on, Ninja Trader. Work with me here. Yes, it's just market making again. Yeah, well, they came to like the overnight lows and are ranging a little bit, aren't they? Kind of wondering. So if I come here and I look at like, well, let me show you on the charts here. So I'm here on the 30-year chart. My mouse is on the 30-year chart, and I'm just putting my cursor at the high. And immediately I notice that the high in the treasury was also the high in oil and close to the high in the S&P 500. Let's zoom the S&P 500 in here a little bit. Okay, the S&P started turning down a little bit later after they opened, I guess. And that shift also coincides with a shift in the dollar, I believe. My dollar chart's not updating very well. Yeah. So really all of this movement that we got was just a move in the dollar. And I'm not even 100% sure where it was coming from, because so the dollar started getting stronger, and we did see the Japanese yen fall, but like the decline in the Japanese yen isn't that much. It looks like the ECB, it looks like the euro was a more significant amount of it. But that's a really good. I'm surprised we didn't notice that earlier. That it seems there's some big shifts going on in the global economy and with the dollar, and that's kind of driving the action. Or at least it's driving a lot of the action in the treasuries and the commodities. The S&P 500 might be more disconnected from those things than usual because they're very, very focused on earnings right now, right? Yeah, euro is 57% of the way in the Dixie bag. It's true. But like when I look at that move for I mean, they all moved down, right? But that move for the Japanese yen was just kind of like an okay move in the Japanese yen, whereas a move like that for the euro was a decently sized move, isn't it? I'm just kind of like eyeballing it, so that's not like too precise or anything, but if we're like trying to figure out where it's going from, I think that we would want to look at, from the information that we just got, what's the difference between the Europe and the US that might be causing the currencies to shift. New home sales just suffered the biggest annual drop since October 2021. Median price tumbled. I love how Zero Hedge is always able to make it like seem negative because it was better than last month. Paul Pelosi hammer attack footage to be released to the public? What? Oh boy. Well, that'll be interesting, won't it? Oh man. You know what? Since it's on my mind, can I say something political? I think that in the zeitgeist that Republicans are corrupt and or stupid is a pretty well-established part of the zeitgeist of internet culture. Largely because the internet culture does tend to be a little bit more dominated by left-leaning people, right? And in my opinion, the Democrats are just as corrupt, if not more, than the Republicans. They play different kinds of tricks, but they're not your friends. And people kind of gloss over it or don't recognize it. And I'm hoping that here in the near future, that more young people start to realize the games that the Democrat Party is playing with you. The one that drives me crazy, the one that upsets me the most, game that Democrats play, is the ruin a system and then use that as justification for the government taking it over, right? Like that is straight up what they did with Obamacare. The person that wrote Obamacare, like the main architect that did all of the writing for Obama, like straight up said that this was a Trojan horse for a single payer system in the future, and that it wasn't really intended to reduce costs or anything like that, because they want to be able to come back in 10 or 20 years and just have a single payer system and use how bad Obamacare is doing as a justification for doing that, right? And they do this all the time. They'll come in, they'll ruin a system with all of this stupid rules and legislation about it, and then use that as a justification to take it over. And I think that the Generation Z people are starting to figure this out. The thing that is red pilling them on this, if we use that terminology, is the Stock Act, the whole Congress trading stocks with inside Congress and congressional information and making money from it. And yeah, like everybody does it, but who's the worst offender? Speaker of the House, or former Speaker of the House, Nancy Pelosi, right? And now they're starting to pick up on it, I think. Okay, so let's see here. Actually, I was saying the biggest one question, I think we were saying what would be the differences between the euro and the United States. The biggest one, euro, is adding countries with different inflation and growth profiles, which is more of a driver for euro than international trade. And they added Croatia this year. Okay, well, that is a very important thing to know. But I'm talking about what would be driving a decline in the euro right now, to this morning. Because, you know, is there something in that data that we got that kind of suggests the US strong relative to the euro area? I'm not sure. It was good looking data, and there are some things about Europe that don't look very good right now, but I can't think of anything clear enough to explain the flows, you know? No, I'm not talking about the last month. I'm talking about the last 2 hours, right? Why did it go up the last month? I don't know. The dollar, well, so let's pull up a larger term chart. So I always do it on a chart of the 6J, but you can just look at the dollar. The euro has strengthened relative to the dollar over the past month. And I would say that honestly, this whole period here between like September and well, I guess it was November, but like this whole time period, I really did not like when the dollar was up that much. Like, I mean, first of all, it wasn't good for markets, but I felt like it was way too excessive. It was way so excessive, and so I feel like that some of this downside is just kind of like coming back to reality. The world's not ending. The chances of a soft landing are increasing, maybe, and so the dollar has kind of come down. So I think that that's one driver. It does seem like the ECB has a little bit more flexibility than the US does, right? Because they're not dealing with quite the same problems that we are, well, in terms of like inflation and so forth. Now that I got a few prints there, I'm gonna zoom out here so that we can see the colors as it goes along. Hopefully by the end of that, well, it might not be by the end of the session. Maybe a 5-minute chart is too thick to do this on. Yeah, euro went from 0.97 to 1.09, so 12%. Wow, that is way more than I would have expected. The euro in the past 6 weeks. Right, so a lot of the when I was saying like coming back to reality was before 6 weeks ago, wasn't it? Another thing we'd have to think about on it, I'm not saying this is probably what's moving it before, but something that we might have to consider is moving euro in the future is this conflict in Ukraine just continues on, and not every development in this is good, right? And the Ukraine war becoming a more and more persistent thing is not a good thing for the euro area. It's not a disaster or anything, but you know, it's just one factor that's not necessarily positive. But I'm still asking here in the past 2 hours why the dollar strengthening. I think it could just be from the news, because the initial knee-jerk reaction from the news was dollar higher. And then they kind of like readjusted, and now, you know, one move up here and now in a range again. But I guess kind of the thing is if we're here trading the treasuries, and if it really was like primarily the dollar that was moving, and we don't necessarily understand why the dollar was moving, we don't necessarily understand what might make it move in the future, our default expectation has to be that it's just going to kind of chop around. The treasury is going to chop around and be difficult to trade, right? I think we got a good trade that was, you know, lucky and mostly from just following the flows, but probably that was the best action that we were going to get. So Brannigan Barrett pointing out from, I think, their Discord, it sounds like that Axia has like a Discord now, and they're really enjoying having it. The dollar is one to watch. Usually the most crowded trades will give early signal. That might be true, yeah. Treasury Department imposes sanctions on multiple individuals linked to Wagner Group. What's that about? Oh, Russian private militia Wagner Group as a transnational criminal organization. Gotcha. Russia sanctions. Do you think that I'm overreacting to what's, you know, I'm not necessarily getting a ton of news out of Ukraine, but what I am hearing, it doesn't necessarily sound good. And it does sound like that the Western powers are kind of escalating because the Ukraine military is hurting a bit now, and so they're giving them tanks. I'm concerned that the war in Ukraine becomes a hotter issue in the near future. Is that fear warranted? I'm not sure. The thing is that I don't really have a specific reason to think that that's going to happen. That's just like my inkling from like, I feel like I should be hearing more about this, and I'm not. And what I am hearing doesn't sound good. Ooh, you know what? That reminds me. How did we do on our poll here? Well, 60% of you said flatter after 15 votes. We're basically where we were. We're basically where we were. I do think though that like the trend most of the day today was flatter, so I'm gonna have to give it to the flatter side. Even though I don't think that anybody really won. You probably didn't make money on that trade if you were in a spread trade, right? So we are quote flat. Yeah, it's not really much movement at all, right? You come and you look at it. I'll zoom in here. This is my spread indicator. I have an advanced, there's a free version and an advanced version at speculatorseth.com. So you can see when we talked about it, we were like here, and I was like, might be steepening back up again. Here's like the key inflection point, and like it did get flatter, but then it came back up. And again, like the amount of flatness that you're getting, not very much. So that's why I feel like, I guess since we really have to call a winner, I think I'll give it to the flatteners, but I nobody made money off of that, right? Look at oil here, man. That's a move. It's bouncing pretty hard though. Oil definitely been like the most active. You know what's the biggest winner this morning though? Is wheat, up 1.76%. Wheat followed by the NASDAQ, and the biggest loser, natural gas. Oh, natural gas. Followed by gold, down 0.7% right now. Gold. Do I not have silver on that list? Whatever. It shows you that overall markets are doing well this morning, but it's way less volatility today than I expected. Went from 11 to sub 3. Wait, what are you talking about? We talking about this spread now? The spread that I'm talking about here went down what? Yeah, went down three ticks, and then reverted back up. So the up move is, yeah, it's about 3 or 4 ticks. Oh, natural gas. Yeah. Man, like do I have a long-term chart of natural gas up here? I don't. Oh, no, wait, I do. It's this one right here. It's just I can only see back to November. Look at that. What is that one? Well, I mean, there was some reasons why natural gas got really expensive here in November and everything, but I think that the larger scheme of things, what was the answer? We were overly concerned about that issue, weren't we? Whenever I see something like that, it kind of makes me nervous because, yeah, we avoided it this time. That doesn't mean that that's what is going to be like next year, right? I'm still concerned that the natural gas issue could come and bite Europe in the butt in the future. I sure hope that they took that scare seriously and use that to, diversify their energy sources and stuff, right? I sure hope that they do some significant work in the next year so that this isn't a concern next winter. And you know what? Make some nuclear power plants, please. TikTok's been sending more stuff about nuclear power lately. I think part of it is just that, like, it switches between topics. But the other thing was that NewScale did get their plan approved. Like their mini nuclear power plant, like they got approval for it. Like they're gonna build one. So I think interest in nuclear is increasing. I really wish that they were a public company, man. I mean, you can get private shares from them, but I want in on NewScale, man. I want in. Please. I want to be invested in next generation nuclear power. And there's a lot of, that's a speculative trade to some extent, but I feel market is not efficient, and that means that where we put our money matters. So I want to put my money not just where I think I can get a great return, but where I think that it will be the most beneficial to society and it will do the most good. And I think that right now the place I can put my money where it will do the most good is in next generation nuclear power. No, it's not. Is it? Sorry, is it New Scale? Oh, maybe I'm getting them wrong. I think I have companies mixed up because it does look like New Scale is a public company. Maybe I should just buy it. Wait, when did they? So hold on, New Scale IPO. Oh. Oh, no, you know what happened is when I like really aggressively looked into that stuff, it was a private company and it's been public now for about 6 months. And I think that even I remember when that happened and was kind of like, well, I don't know if you want to buy into that. So because, the overall market was going down. And so I just kind of shelved it. So let's come and look at it a little bit here. There's another, what's the other company? There's another company that it's like TerraPower or something like that. Is New Scale the one that Bill Gates is in? Oh, okay. I see where I'm confused. Yes, TerraPower is the one that I wanted. TerraPower is privately owned. New Scale is, I think, one that I wasn't on my list and I didn't investigate. But that's good. I mean, let's come look at it. We'll look at it on a daily basis. Ooh, I like that, actually. I'll tell you what, I'll put some in. Put in the rest. Hell, right now. Why not? We can get a good price today, maybe. I think where we're at in the evening, is there any help to us? Probably not. So... we need to do a little bit more research here, make sure that there's not something really concerning about this stock, right? So let's start with Simply Wall Street. Did I just close that freaking window? Yeah. SMR. Interesting. So this company has much better health than I thought it would for what we're kind of looking at. Earnings are forecast to decline by an average of 8.7% per year for the next 3 years. Really? The future growth score is not good on this stock. So that's kind of our big red flag that, why isn't everybody pouring into this thing? Well, because their future earnings don't look too good. January 13th, new scale costs are problematic. See, when I was like, I want to get in on TerraPower, it was because it hasn't IPO'd yet. So I'm like, oh, we should be getting in early. With new scale, since it's already out there, now we kind of have to look at it as more of a traditional stock because we're not getting anything from the IPO newness of it, right? So we have to compare it to everything else. So let's see here. Earnings, they lost 41 million. It's not like the end of the world, but they have some expenses, man. They're not bringing in much revenue either. Net profit margin negative 417%. Sheesh. Okay, but from a valuation perspective, it's okay. Below for I should just pull this over here for you guys so you can see what I'm looking at. Price to book versus peers is good, but not, versus the industry as a whole, like energy as a whole. And they do say that that's below fair value. So why is it below fair value? Because where is it? Oh, insufficient. Oh, there you go. Their estimate of fair value, well, they think that it's about 61. Really? The thing is it's not an expensive stock. Real quick here. Finance, yahoo.com. What is the SMR? SMR. Some metrics here that would be a little bit easier to catch over here. So what is the beta on this stock? Oh, where is it? Share statistics, stock price history. Oh, beta. Oh, beta is only 0.97. Okay. The analysts seem to like it. Even though the future growth doesn't look very good. So they expect the company to grow strong compared to the industry, but they don't expect them to be like profitable or anything like that. Past performance hasn't been very good. And you're getting a negative return on equity, right? So I'm not quite sure on that one, because the issue is I see some things about this that seems like it could be an okay company to take on. One of the problems is, like, if the S&P 500 takes a dive here, they're probably going to get slaughtered, right? Because it's been all of the unprofitable speculative companies that have been hammered the most. So this one, if there's a decline in, like, let's say that the Federal Reserve meeting goes really badly next Wednesday. Okay. Federal Reserve meeting goes really bad next Wednesday and the whole market takes a hit. this stocks can be a lot cheaper, right? Okay, their president has been around for a long time and isn't like making a exorbitant amounts of money. I mean, it's $2 million, but it's not. Some of these people are crazy, right? Like how much money Bobby Kotick makes is like freaking theft. I would not invest in Activision Blizzard just because of that prick. But it's good. Looks like recent big insiders have been selling, so that's not necessarily very good. Yeah, I love this. They show it's like they're all the insiders are selling actually. But I like this, you know, like I want something that the institutions aren't super into yet, right? It seems to me like for the trade that I'm trying to make, that on like a 10 to 30 year horizon, that this one would totally make sense. I'm just not sure that the current price is the best price. So maybe what I could do is scale into it a little bit, right? Just nibble a little bit here, and then next week see if we fall down. Maybe do some averaging into it. I should be able to buy. How much do I want to put in? Let's see here. I think we want to put the 1K into it, but I'm not 100% sure here. Let me check. Oh, our portfolio's been doing okay the past few days. I didn't check yesterday. Up $19 today. Well, that's not bad. My Goldman keeps trugging along, man. This, I tell you what. You're all so quiet. You have no opinions on nuclear power, huh? Or maybe it's so different from what we're talking about. Maybe you're like totally entranced by this. Okay, so like my Goldman, that was ugly. Okay, that was actually a whole month ago. And then like when the earnings came out, I was worried about the earnings. That was this orange candle right here. But we're actually higher than when the earnings were. So like maybe the worst of it is over. I don't know. But it's been resilient. It's been resilient. So, oh no, wait, this was the earnings day. Has it been that long? I thought that earnings was like not only like last week. Yeah, whatever. They've handled things better than I thought. We should be careful though, because again, like if I'm concerned about the market not liking what the Federal Reserve does next week. I feel like that above 4,000 is like really nice, and so I'm worried, like, can we really maintain that level? And I'm my portfolio is a little vulnerable. I think that if we take another dive, it's gonna get hit hard, right? And so in that kind of a situation, if I have a decent amount of cash, okay, so I can buy. I've got a little bit less cash than I would like, but I kind of want to be fully invested now. So, but not 1,000, 760. But yeah, if we go down, I want to be able to put that cash to work at a better price. That would make a really big difference to the performance of my portfolio. If there's like a 20% decline, let's say. Well, 20% decline in that particular stock. But since it's one beta, that's maybe not realistic. Can we talk about cell phones? I'm not, I've only ever had the Samsung phones, man. I got the very first one. Because I saw everybody having their iPhones. They all seemed to like them. I was like, well, there's no way you're going to get me to buy an Apple thing. So I waited for somebody to make a decent competitor. Got the first Samsung phone, and I just keep getting them. I like them. But you know what, man? Like, I feel like we've been it for a long time to the point where the performance that you get out of your phone is way more than what you need, you know? Still rocking the iPhone 7. I legit only replace them like once every 4 years. I keep my phone way longer than they want me to. Because they want you to do it like replace it like every 2 years or whatever the plan is. Do you think that the S&P 500 can hold this out today, or you think that they're going to go a little bit lower? Because it does seem like they're struggling a little bit. Don't you think? While we're at it, we can take a look at some of my other ones. I haven't looked this week. I've been busy with other stuff. So Zillow Group did not so bad the first month of 2023. That's good. There was a point where my loss on, I really should not have bought this stock. This was like the worst mistake. Like, I'm okay with being in it now, although maybe there's better opportunities for me elsewhere. But I picked the exact wrong time to get into it. I thought that the downside was already past, and I was so wrong. The Zillow Group is not the one that I want to look at. It's Sumo Logic is the one that interests me. Oh, when was that? Oh yeah, no, I remember that day. Their earnings were good. And so they've kind of recovered back into like a reasonable range. It still could be better, because I think I bought it at, what did I buy it at? Oh my gosh, this is so terrible. I bought it at 24. Oh yeah, at one point it was freaking awesome, right? At one point it was, so I bought it, I bought it here. It was, I never, no, I bought it here. I bought it the first buy. I waited like a month after the IPO, and then I bought it just because I liked the company. And at one point it was like freaking amazing, man. But like, it took such a hard dive since then. I think though, my scenario on this is that eventually this gets to 100. I think that they've got so much growth and so forth ahead of them. This company is like totally slept on. Like when things didn't work out over here, and the whole market was turning down in 2021, like a bunch of analysts dropped them, you know, and so the stock got left for dead, and then everything after this is just going down with the broader market and getting hit a little bit harder than the market because, you know, they're a new unprofitable company, right? But you know, this jump here that says no, like it is a strong company. And in other words, prices are not efficient. Not all available information is priced into the stock. So if we think that a stock is undervalued, why is that? Well, why was this stock undervalued? One, because initially they disappointed and analysts kind of left them. So a lot of people sold because the analysts weren't covering them anymore. And then they got oversold because it's a growth company that's not yet profitable, but I think will be, and I think will generate a lot of revenue in the future. So we understand why it's undervalued, right? So I think that this thing has a good future. I want to keep that one. Margin calls are very, no. Well, there you go. Like this, the whole thing is like, if you go back to what is his name? Peter Lynch, sorry. You go back to what Peter Lynch says, you know, they're always gonna overbuy and oversell. So these prices that they had up here were ridiculous, frankly. I probably should have sold it, but I don't want to be making that granular of a decision on my stocks. I know that I would just make mistakes, so I err on the, you know, just trying to hold it sort of a thing. Of course, I could have like doubled my money if I had gotten out up in here and then be buying in now. And but you know, like, are you actually going to pull that all off successfully? You don't even know what it does, so no idea. Okay, so let me go back. Sumo Logic. I own this stock. I have to be really clear about that, right? I own this stock. Okay. Sumo Logic does monitoring and alerting, yeah, for cloud applications. So, and in particular logging. So what you do is there's this little agent that you put on all of your servers, and then you tell it which logs you want it to monitor, and then it will grab all of the logs on that machine and it will upload them into the cloud in a really, really clever database that makes it very easy for you to search through the logs, right? So that's the main thing about the company. So they have really, really cool technology, and it's basically turning into like the whole thing of getting on the machine and looking at the logs. We don't do that where I work. We just use Sumo Logic, and it works so well. It's not perfect. The agent's not, it could be improved. They really need to get away from the Java agent and get a C++ agent. But like the overall idea of it is awesome, right? So when everything got hit, and tech in particular, right? They can't spend on those sorts of things. So Sumo Logic didn't get as many new subscribers in the beginning of 2021 as the analysts wanted. And that's why he had such a precipitous decline here, you know, second quarter of 2021. Okay. But in the long run, I think that the technology that they have is good, and that more and more people will continue to use this, and that they will be making money. And can they get above these highs? Well, I would hope so, because they're still such a small company. And if anything, in my opinion, the biggest threat to, let's say, this hitting 50, let's just say getting above 50, I think the biggest threat to Sumo Logic to getting to 50 is that they get bought out by Microsoft before that, right? And there's some growth coming into it too. So like they do logging, but they're getting into monitoring. Like, okay, you're using 100% of the CPU on this server, for instance, right? So that's kind of more Datadog's thing. And if you look at Datadog, like they just love Datadog. So what this is like an overlooked Datadog. That's why I think it's overvalued. But it's just with all these things. I guess Sumo Logic is a little bit different because their earnings just happened and were good. So we're probably it's already too late for that one, you know. But for new scale, sorry, SMR. I do believe we looked at this a while ago, and we said like when it was like 12. So now we're looking in here, especially if I could get it at 10. I think I would like that. Yeah, the headline that's been for 5 days hasn't actually moved up that much on the news that their thing got approved though. So I think that I might need to do a little bit more look at SMR, but I think I'm definitely going to put that on my list and watch it, and possibly make that my final one. Cause I had like, so I got rare earth element resources. So I got a miner and a bank and a tech is Sumo Logic. And then I got Zillow Group, which was supposed to be like real estate, but like it really didn't work out like that. So this stock, maybe I could just sell. Maybe I should just sell the Zillow. I don't know. And then Berkshire is, I don't really count in my portfolio because that's just like a general everything. And then silver. So if I were to, you know, I think I can just keep the Zillow, but let's just say that my 5, I take the Zillow out and I put new skill in. I think that would be better. That would be an improvement to the portfolio at least. Rare earth element resources, when that one I'm just so, I mean, obviously it doesn't look at this stock, it's just like completely dead. Completely dead. But I'm still interested in it, man. When you look at what it was doing in 2021, I got in before all of this. I really should have sold some of it. Again, like when all this happened, I don't know why I wasn't selling more. I said, well, I'm not going to sell all of my positions and then get out, but I should have at least taken profits, right? So that's one thing I guess I'll change next time. So I won't completely get out of a position, but maybe I should, especially when it's doubled, I should at least take out half, right? But I'm still like well, actually, what am I? I'm in from 0.47 and we're 0.38, so I'm down 10 cents. But it's been through all of that. So I think that this can happen again if the thing that they're trying to do actually works. Because this was all just market hype. This was all just retail traders YOLOing into things. Ignore this. This should never have happened. They should never have gotten much above 1.5, let's say. Anyways, time for me to get going. I would like to do, the thing that I want to do this year is, yeah, that's exactly what I hear from Bitcoin bros. Yeah, it's true. But that's the way that I want, at least this portfolio, this is the way that I want to play. I think that rare earth resources and nuclear power are important things. And I am okay with putting money into those and it going completely to zero because I want to see them happen, right? But that's kind of the way they're doing it. I would really like to move to, a way of managing my portfolio that's a little bit more systematic, so that I can kind of take advantage of when I'm getting those temporary profits that probably aren't going to last, and vice versa, buying stuff on the bottom. So I really want to do some more work on portfolio level strategies and kind of quants. I want to do some quant modeling that might help me with my stock portfolio, with the idea of eventually turning it into some sort of a fund or something. So, okay, I should go. I will see you guys tomorrow. Is it Friday tomorrow already? Wow. And we do have some important numbers tomorrow. We still got that inflation index, the PCE index. So we'll see what happens tomorrow. But we'll be there. So we'll see you then. In the meantime, stay excellent.